Hello and welcome to Startup Street. I'm Arundhati Ramlin, and with me as always is Shruti Mishra. These are the top headlines from the startup world. Venture debt financing firm Stride Ventures announces the final close of its second Indian fund to raise $200 million, exceeding its target corpus. The second fund will ramp up deployment in late-stage venture capital-backed startups in consumer, financial technology, agriculture technology, B2B commerce, and other sectors.
E-commerce solution provider Graas, also known as Growth as a Service, raises $40 million in the first close of its Series A round, led by Galaxy, Performa, Integra Partners, Huge Ventures and AJ Capital. A part of the fresh capital has been deployed to acquire 100% of D2C and data specialist Shoptimize and Southeast Asia's marketplace specialist SELLinALL.
Yes Bank has invested an undisclosed amount in venture capitalist Group Fund. The bank has also invested in its associated firms Beams Fintech Fund and 9 unicorns. With this investment, Yes Bank aims to bolster its investment in digital finance and help tech companies ideate and experiment with various use cases such as agriculture, healthcare, commerce, and education.
The Central Consumer Protection Authority has imposed a penalty of 1 lakh rupees on Flipkart for allowing the sale of substandard domestic pressure cookers on its platform. CCPA Chief Commissioner Nidhi Khare told PTI that Flipkart has also been directed to notify consumers of all 598 pressure cookers sold on its platform, recall the pressure cookers and reimburse money to the consumers.
Tencent suffers its first ever quarterly sales fall. As per Reuters, the company's revenue declined 3% to 134 billion yuan for the 3 months ended June 30th, from 138 billion yuan a year earlier. Net profit attributable to equity holders stumbled 56% to 18.6 billion yuan.
Meta to disable new political, electoral and social issue ads a week before voting begins for the US midterm elections in November. Ads that have previously run before the restriction period will be allowed to run during the time. The company said it is also investing in proactive threat detection. Well, those are the headlines we are following up for you today evening. On what's brewing today, new e-commerce solution provider Graas has raised over $40 million in the first close of its Series A funding round to launch a category-defining technology solution, Growth as a Service. The round was led by Galaxy, Performa, Integra Partners, Huge Ventures and AJ Capital. Angel investors from across Southeast Asia and India also participated. Now, part of the fundraise has been used by Graas to acquire 100% of D2C and data specialist Shoptimize and Southeast Asia's marketplace specialist SELLinALL. To talk about the road ahead, joining me now is the co-founder and CEO of Graas, Prem Bhatia. Prem, welcome to Startup Street. Now, Graas's first fundraise will be used to launch the Growth as a Service solution across Southeast Asia and India. I believe it is an AI and predictive analytics engine. If you could tell me, how will it turbocharge e-commerce growth for brands?
Yeah, thanks very much. Lovely to be here. I think that, it's if you compare where we were 12 months ago, it's a fairly despondent time. Growths are plateauing in e-commerce, shops are opening up again, VC funding is down. It's a perfect time to sort of launch a growth engine, which is just based on predictive AI and analytics. I think that, the people selling online are grappling with margin pressure, and margin pressure could be from inventory, advertising, warehousing costs, last mile delivery costs, revenue shares. And so, yeah, it's a great time to launch Graas and Growth as a Service.
All right. Now, Prem, like I mentioned, part of the fundraise has been used by Graas to acquire D2C and data specialist company Shoptimize and Southeast Asia's marketplace specialist SELLinALL. Now, the acquisition of Shoptimize also marks your India foray. You're, based in Singapore. Talk to me about your India plans.
Yeah, so here's the thing, right? I mean, I don't know how many people realize, but there's a sort of a war which is about to begin. And it starts in Mumbai and it ends in Manila.
Okay.
You've got the US it's done now. It's an Amazon Shopify play. China is predominantly Alibaba WeChat.
Yes.
This is where the action is going to happen over the next 5 years. You have everyone from Amazon to Reliance to Nykaa to Walmart, Flipkart to Shopee to Lazada, Alibaba, Facebook, Google, TikTok. This is the geography where the battle is being played.
Okay.
And the reason for India fast was simple, right? I mean, India is a $800 billion retail market. It's less than 80 billion in terms of e-commerce sales. That's like less than 10%. You look at China. China is like a 50-50 between overall retail and e-commerce. So, we're very bullish about India and growth.
Prem, in both the acquisitions that you've made, the founders have joined the board of Graas and will continue to be a part of the combined entity. What is the impact you're hoping to generate with these acquisitions? Also, if you could take me through your current business growth numbers. I understand you've launched only in April this year, but what are the kind of numbers you're seeing?
Yeah, so I think we're internally at the board level, we would look to do $1 billion in GMV.
Okay.
AI-powered GMV, not order management GMV. So I think that's really where, the focus is. I think that, it's a little different because you see Southeast Asia is a very marketplace heavy play with the likes of Shopee and Lazada and Tokopedia dominating. India is less so, and there's more D2C and data and analytics. But look, the similarity is fairly evident. You speak to any venture capitalist in India today, and you say, out of the $1 million you give a portfolio company, where does half go? And they'll all say the same thing. It's going into advertising. Okay. Right?
All right. So what numbers? You can't give me a sense of the kind of numbers you're seeing currently?
Well, so it's difficult to determine. I mean, look, India is at about $80 billion. Southeast Asia is at about $120 billion. That's $200 billion between the 7 countries that comprise India and Southeast Asia.
Okay, Prem, any more acquisitions in the pipeline? Is inorganic growth the way forward for you in these markets?
I mean, look, the capital raise, we're halfway through it. It does allow for strategic acquisitions, and you guys will be the first to know.
Okay, all right. Prem, Graas uses predictive artificial intelligence to equip brands with automated e-commerce recommendations that impact their bottom line, driving profitable growth. If you could give us a use case of how you're doing this, and also what is the kind of exponential increase in profitability you provide to your clients, if you could give us a percentage.
Okay, so let's just keep it simple, right? Let's say that you are an entrepreneur, salesperson living in wherever, right? You plug in, and then we tell you that your 100 ml face cream is selling faster than your 200 ml face cream. We'll tell you that today it's selling faster on Nykaa than it is on Flipkart, that Karnataka is doing better than Maharashtra. We'll tell you that the Facebook costs today are slightly more in Karnataka. We'll tell you that the last mile costs, however, are more expensive. We'll tell you that if you combine your 100 ml face cream with a 200 ml hand cream, you're going to exponentially increase sales. That is only possible with a thoroughbred predictive AI engine, and that's what we do. And we're seeing the results. We're seeing customers who have plugged in and they have run out of inventory because they've sold that quickly.
Okay. One final question for you, Prem. What is your revenue model? How do you make money? And are there any revenue targets that you've set for yourself?
Yeah, I think it's safe to say that we want to be a centaur, 100 million ARR company in 36 months. And as far as the revenue model is concerned, it's really simple. We take a percentage of GMV or total sale.
Okay. All right, Prem. We're completely run out of time, and many thanks for joining us on Startup Street, and we wish you the very best with all your growth plans.
No, pleasure to be here. Big fan. Thank you very much for your time.
Thank you, Prem.
And from one fundraise to another, Bangalore-based Exponential Energy has come up with a way to deliver 15-minute rapid charging for electric vehicles. The company has just raised $13 million in a Series A round, which was led by Lightspeed. All existing institutional investors, Yournest VC, 314 Capital, and Advantage VC also participated. The startup will utilize the funds to scale up its network. And joining us now to discuss this technology, how this technology works, and its future targets is Arun Vinayak, the co-founder and CEO of Exponential Energy. Arun, thank you so much for joining us on the show. Now, like I said, you've come up with a way to deliver 15-minute rapid charging for electric vehicles. Can you take us through how this works and take us through the tech that allows you to achieve this feat?
Thank you, Arundhati. It's wonderful to be here. It's a pleasure. Right. So I think today EVs already drive better. I think the questions holding back adoption are all things around energy. Where do I charge? How long will it take? Will my battery last? And we look at energy as a two-sided problem for electric vehicles. There is the battery and the charger, and the question of and how both of them work together. How do they transact energy from the charger to the battery, right? And in some sense, a one-sided approach in the industry until now, companies focusing only on the battery or companies focusing only on the charger has led to a broken bridge of energy between the chargers and the batteries. That's what we build. That's what we simplify. We build our own proprietary batteries called the e-pack and our own chargers called the e-pump. Put together, they deliver 15-minute charging. And we also provide a 3,000 cycle warranty, even if you rapid charge the battery every single cycle.
All right. And like you said, you've raised about $13 million. So where will this money go? What's the fund allocation plan here?
Well, our first focus is to scale up the network. We've already built the tech that makes charging seamless. The next step is obviously to ensure the seamless access to the charging station and to the network. And to put this in context, there are only around 400 to 450 petrol stations in a city like Bangalore. Right? I mean, across the last 100 years, all the petrol companies, I'm talking petrol, diesel, CNG, gas, put together, there are only 450 stations. So we're going to take that head on. We're going to have 100 e-pump stations in every city we enter in, starting with Namma Bengaluru. And of course, on the other side, we will be using the funds to streamline our production for the battery packs. We already have our first vehicle partnerships, and we're going to be using the funds to also onboard a lot more Exponent-enabled vehicles onto the network.
Right. So you're planning to like scale up the technology and make it easily accessible. So like you said, you're essentially going to use the funds to scale your e-pump network to 100 locations per city. So how soon will we see this happen? You said you're going to start in Namma Bengaluru. So how many cities are you looking at currently? Is it just Bangalore or are you looking at other cities as well?
Well, we've already got the first 30 locations signed up in Bangalore, and we're going to hit 100 in this financial year in Bangalore itself.
Okay.
We believe in a lot in testing, and that's important in the EV space. So we're going to be focusing on Bangalore till in this financial year. And once we stabilize, prove out the tech at scale, we're then going to look at other cities. And Delhi is definitely the next stop. It's the largest market when it comes to electric vehicles today.
Absolutely. So 100 by the end of this financial year in Bangalore and then Delhi next. So take us through your business model then. You're currently targeting OEMs, but you're also eyeing the CV space. So what's happening there?
Well, we partner with OEMs. Like I said, energy is a two-sided problem. We can't just set up a charging station and hope we run a profitable station. It just doesn't work. Right. So we sort of have to partner with OEMs to have our batteries integrated into the vehicles. That's one side. But really, our customer is someone's buying the vehicle and running it on a daily basis. Today, we raise a sharp focus on the commercial vehicle space. These are guys who are running logistics, last mile deliveries. Clearly, they want to go electric. The big problem today is how do I run operations with a 3 to 4 hour charge time? Right. That's what we simplify. We unlock the segment to run as many shifts as the diesel vehicle, while of course having all the advantage of electric, higher torque, low vibrations, and obviously cheaper operations. And that's the segment we're focusing on. So today, our business model, we are an energy company. What do you pay for diesel today? You will pay for batteries and charging in the future, and we monetize both.
All right. And what's your current network like? What's the traction that you've seen for your batteries, and how quickly do you expect this to grow?
Honestly, I don't think demand is a problem in the EV space today.
Okay.
Right. Especially when you are able to disrupt the whole space overnight. Right. We are now providing a proposition that's as good as diesel, and it's cheaper than diesel when it comes to operations, and it's got greater performance than diesel when it comes to whole things around torque. So we believe when something like this happens, markets shift overnight, right? So and if you look at the last 3 months, the three-wheeler space has already reached the tipping point. 50% of the three-wheelers sold in India are now electric, right? And this is despite all the challenges around energy, right? And now, if you can simplify it, I think sky's the limit. We are focusing on a 2,000 vehicle pilot in Bangalore to start with, along with 100 e-pump locations. So that's something that we're going to be focusing on in this financial year. And then, like I said, we'll pick up Delhi at a time. Like I said, demand is really not the issue. We're focusing on testing and executing at this point.
So demand, not a problem there. So testing and execution right now. But let's look at the numbers then. What are your revenues currently like? What's the target you've set for yourself going forward?
Right. Well, we're now a pre-revenue company. So like I said, we're in the early testing phases with our customers.
Okay.
We're now transitioning to sales starting October, which is when we monetize both the battery and the charging. Put together, the commercial vehicle space is a $150 billion market when it comes to just energy. And I'm not talking the vehicle sold, just talking the energy market, right? And even if we win 30% of that with this last mile, I think that's going to be a focus over the next 4 to 5 years. Over the next 36 months, we do see ourselves expanding to the top 10 cities in India.
All right, so pre-revenue right now, but you're going to start monetizing in October. And you recently partnered with Altigreen for your battery pack. So take us through that partnership. And are you looking at more such partnerships? Are you already in talks with anybody?
Well, yes, Altigreen, I think, was one of the best products in the three-wheeler space in India. They've been around for a long time. They also recently raised a 40 million round. So they are expanding. And we decided to get together and make that really good vehicle even better. With now the fastest charging electric three-wheeler in the world, right? And we're now focusing on our partnership with Altigreen in Bangalore. We're going to be doing the 2,000 vehicles with them.
Right.
Of course, we will work with other OEMs as well, and we will talk about that soon. And just when the vehicle's ready.
Right.
We're now in this engineering phase.
Right. So the focus right now is with your partnership with Altigreen. All right, Arun, thank you so much for joining us on the show, and we wish you all the best going forward.
Thank you so much. It's a pleasure to be here.
Yeah. On that note, it is time for us to head into a short break. But coming up next, we discuss the key findings of Chirati Ventures' report that expects the fintech sector in India to grow tenfold by 2030. What are the other tailwinds for this sector? We find out after this short break. Stay tuned.